Hello and good afternoon. We are here with all the important topics right before the U.S. stock market rings the bell. United Parcel Service Inc., UPS, raised $2.6 billion through the issuance of high-grade bonds as companies hurried to price new debt ahead of the Memorial Day holiday. The bond sale included notes maturing in 10, 30, and 40 years, with the $600 million 40-year bonds yielding 1.05 percentage points above Treasuries. This marks UPS's first blue-chip bond offering of the year, following a $2 billion sale in February 2023. The bond issuance comes on the heels of better-than-expected first-quarter earnings reported last month and amidst restructuring efforts within the company. Additionally, Chief Financial Officer Brian Newman is set to leave UPS on June 1st to focus on his health. Despite the positive earnings report, CreditSight's analysts remain cautious, maintaining an underperform recommendation due to expected earnings declines in the second quarter of 2024 and higher leverage tolerance. They noted that UPS has increased its leverage target from 1.0x to 2.5x, making it their least favored investment-grade transportation name currently. Major financial institutions such as Bank of America, Goldman Sachs, and JP Morgan Chase manage the bond sale. Palo Alto Networks Inc. experienced a sharp decline in its stock price after issuing a downbeat forecast for its upcoming fiscal quarter, raising concerns about a potential slowdown in the cybersecurity sector. The company projected fourth-quarter revenue between $215 billion and $217 billion, slightly below analysts' expectations. Additionally, fourth-quarter billings, a key performance indicator, were forecasted at $343 billion to $348 billion, just under analysts' estimates. This outlook follows a disappointing quarterly report in February that resulted in the company's worst single-day stock drop. CEO Nikisha Arora attributed the downturn to spending fatigue among customers, despite a persistent increase in cyber attacks. The company's third-quarter revenue grew by 15% to $1.98 billion, the slowest growth since early 2020, with earnings of $1.32 per share exceeding estimates. Although next-generation annualized recurring revenue reached $3.79 billion, surpassing estimates, the modest 3% rise in billings marked the smallest increase since the company's IPO in 2012. Management remains hopeful for improved growth in the second half of 2024, despite current challenges, including shorter contract durations and intense market competition. Traders are anticipating significant volatility in NVIDIA's stock as the company prepares to release its earnings report. According to options data from Trade Alert, NVIDIA's shares are expected to move by 8.7% in either direction by Friday, translating to a potential $200 billion change in market capitalization. Despite being substantial, this expected swing is less than the 16.4% jump seen after NVIDIA's last quarterly earnings report, and below the average 12% move priced over the past 8 quarters. NVIDIA, up approximately 87% this year, is viewed as a bellwether for the AI industry, with a market value of about $2.3 trillion, making it the third largest company on Wall Street. Investors are optimistic about a strong quarterly report from NVIDIA, with analysts projecting earnings of $5.59 per share and a rise in quarterly revenue to $24.65 billion from $7.19 billion a year ago. The growing interest in AI has also benefited other sectors, including power, commodities, and utilities. Despite broadening AI benefits, any significant downturn in NVIDIA's stock could test investor confidence in the broader AI trade, highlighting the market's sensitivity to NVIDIA's performance. This is all we have for you this week. We are MEXEM TV, and we will be here next week, same place, same time. Goodbye.